Before we get started, traders, do me a favor and hit the subscribe button, turn on your notifications, hit the like button, and that would be a great help. I appreciate it. Let's get started. Good day, traders. Stacy Burke from Stacy Burke Trading today. Just reviewing again some stuff we talked about last day, the process, the simple process, a couple of things to address. A lot of questions over the weekend about daylight savings time and about process and templates and where do I get in and all these things. I'm just going to clarify some simple things again about what I'm looking for, and reiterating the most important thing is knowing what your best trade setups are instead of going to the screen and sort of guessing. One of the filters I use each and every day are previous day's highs and lows, especially as the week sets up, because this gives me the insight not only on the majors for if we're looking at the calendar for 3-day setups, whatever. I really don't care. I'm just looking for the setup. Now, obviously, one of the reasons I trade gold is the movements in gold are bigger, more explosive, fairly reliable in terms of their consistency, like they happen over and over again. And, I'm emphasizing I'm looking to be in these trades and be done and dusted in, that hour, unless these are major blow-off moves to the low or high of the week. And, again, just coming back to some simple concepts. We talk about the week starting, just looking at gold. We're inside on Monday. No previous day's high or low levels are broken. And just on that, this indicator, unfortunately, I'm unable to detach it as a standalone indicator to make available for free. It's a packaged indicator. I have no access to it, so I'm sorry. But you can still just draw your lines. But I want to point some things out to be aware of. And so Monday traded inside of Friday's range. Excuse me. So whenever that happens, all I do is draw my high and my low. I draw my high and my low. And it doesn't mean I'm going to get a trade. That's where I'm going to start working from. And then I want to know how far is my range? Where's the most profitable trade? How far away is that high or low from the profitable trade? All those things. That gives me insight into knowing if I get something at the high or low of the day at the timing windows of the next session, do I have a trade set up for a 25 to 50 pip move? And again, I'm looking at the level, and then I'm looking at my 1-minute chart based on the timings. So when a 15-minute bar goes up here and reverses at 7 minutes with an engulfment or a 3-bar reversal or a 1, 2, 3, and this is a 1, 2, 3 on the 15-minute chart. If I have a sell setup up here, and again, this is at 75. I don't have my numbers on there, but it's at 75. I know that I've got at least 40 pips down to the low of this most recent swing low. So I'm looking at a 40 to 50 pip move. So just some simple things. I'm inside. I redraw my highs and my lows. They make a low. They hit the stops. They pull it back. They hit the stops again. And then we get a buy back to the high. Now I'm gone. I'm not hanging around for this. But just to understand that working from the high and the low is where I'm placing my emphasis. This is Monday. It's an inside day. It's a narrow range day. But I want you to pay attention to the previous Thursday's low. The market on Friday broke through that, and it also made a peak formation above that level. And you'll notice that Monday's high trades into that peak formation and stops. That's where the high of Monday is, which is now our new high of the week, high of the month, because it's November now. And we have a low of Friday down here. Now I'm looking for this stair-step pump and dump style of trade. So we've traded up into this peak formation. Now I don't know if on Tuesday we're not going to go higher. I have no idea. But I'm looking for the session timings, the opportunity of where I might get a 1, 2, 3 or some kind of buy or sell setup at the high or low of the day. We go up right away, and in Europe, they hit the high at the London Open. They hit the high, and on a smaller time frame, we got a second tap to the high, second 15-minute bar that broke structure. That was a 25 pip move down. 3 bars, you're done. They come back up into the gap time. We have broken structure, and that market comes down 50 pips. So Asia put a low in inside. We're inside of the high and the low of the week. but they came back up in the timing window. You'll notice 1 push, 2 pushes, 3 pushes at the London Open for a stop hunt down. And I'm merely emphasizing about looking at the previous day's highs and lows and looking what's happened in the previous price action prior to that. We had a peak formation. The market's traded back up into the peak formation. I'm looking for the first red day opportunity. First red day, the first red day that closes down in a pump and dump style of trade setup. It could be a first green day going the other way. We had ADP on Wednesday, and again, we broke through a previous day's low on Wednesday morning. Right away, they broke through in the pre-market. They pulled it back, engulfed, and started to proceed lower. They put in a lower high just underneath of the previous day's low. They auctioned down, put a low in place. So we have our Asian low. They go down, and again, once you see this pin in place and the market going into consolidation inside of the range, they're probably done their work on this side of the market for this particular session. We get an engulfment in the gap time taking us up into the U.S. Open. This higher low is now potentially low-hanging fruit. They 1 push, 2 pushes, 3 pushes into ADP, into that lower high, underneath of the previous day's low. So now we have a flip zone for the explosive sell-off, not only to the low of the previous Friday, but to the low, the swing low on our daily chart back from the 18th of October. So we took out not only Friday's low, but we went down and pinned traders that were long on the swing low of the 18th of October. You can just draw that on the bull candle, it doesn't matter. Before pulling back and reversing into the Fed, breaking out of that pin high. So again, pin to the low, there's our stop hunt down, cut that tail off inside. It ends up becoming a flip zone of its own into the next day. We don't have any previous day's levels hit, but we get a high in Asia that the market trades up to, and we get a low in Asia that the market trades down to. And again, there's our pin. Second candle of the Europe Open. They engulf and make a W formation. So when I'm inside, I'm redrawing my highs and lows. If we've traded through a level, I'm looking at how does price behave. Does it become a flip zone for the opposite effect? We trade up to the high of the week. So again, coming back to low of the week, high of the week. The market traded back right up through after taking out the low of the week, back up to the high of the week, and then pulling back and going into consolidation. On Friday, we have lower highs coming into the new day. We have a low of the day made and then a high of the day made prior to the Asian session opening. They come down, give us a pin hammer at the open for an explosive 50 pip move up, clearing out the low-hanging fruit. Again, no previous day's high or lows hit, but we have a low of the day hit, and then the market slowly auctions up, and in our London hour, comes up 1, 2, 3, hitting the previous day's high. We have higher lows. We have a break in structure for our M formation for a 50 pip move down prior to payrolls, which again, if traders held on to that, was a 100 pip move. But payrolls typically will explode or hit stops in both directions. But again, another example of once the pin is in place at the low of the day in an uptrending market, we can enter the market at the low of the day. Now, smaller time frames, it doesn't matter. 15-minute, you could have entered it on this. This is the stops have been hit. You're at the low of the day. It's a 1-bar stop. You can enter the market after payrolls. So we had Friday's pound up in our video. I drew the high and the low, and I said, it all depends on how price behaves. The market was in consolidation later in the session. So again, this is the high, this is the low. I don't want to be inside here. Now, a lot of traders messaged me saying they went long, and that if this market closed up at the end of the hour, they expected this to explode back up. Now, I made it very clear that it's about how price behaves when it gets to the high and the low. The market came down and made a lower high, similar to what we saw on ADP. On Wednesday, on gold, we had the breakdown and then the lower high put in place. This pattern right here is the exact same pattern that we just saw on pound yen. So emphasizing timing. So what happens is we're in consolidation, and then all of a sudden the market comes to life. Bang, 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 bang. 1, 2, 3 to the high. So once I have my levels that I can identify as possible entry areas, and we get our stop hunt, after the BOE in a strong second day opportunity for a short, now the market, had it broken down first, we might have had a buy down low for a move up. But the market in the London hour went up 1, 2, 3, hit stops, and then came down 50 pips. Now, the second question I got was, well, this could go all the way down because there's tons of room on the daily all the way to the left. If we just take a quick peek, we can see it's in a downward moving market. And I said to them, what's your plan? What's your trading plan? In a market like this, 1, 2, 3, bang, and I'm short, I'm out in there, and if I get 50 pips in that hour on this pair, hour 20, whatever it is, I'm taking the money because the payrolls later, anything can happen. So it's about identifying a best trade setup. This is textbook perfect consolidation, bang, bang, bang to the high in a downward market, second day trade into an existing lower high for the fast, explosive 50 pip move through the low of the day. So coming back to keeping things simple, I'm looking for opportunities where, there are certain trades that they're not going to set up right. Like on a Monday, this is a Monday today. Last Monday was inside of the range. Eventually it spread apart and gave us a high-low opportunity. So high of the London hour back down to the low of the day. That's when, the market's going to, as it spreads out and expands the range, your opportunities increase for a better trade setup at the specific timing windows. Then as the week expanded, we had an opportunity to present it over 3 days for a sell-high setup at a previous day's high, which became a flip zone. They broke structure, pulled back into that flip zone for the sell-off into the BOE. Today we've traded through Thursday's low on Friday. We're still below there. So this technically still may be acting as a selling area now heading into the London session. We may get 3 peaks or it may roll over and retest that low. And as we saw in the daily, it may continue down lower. Now, if this market proceeds to break higher and work back inside of that low from Thursday, we could retest that high from Friday. As it stands, we're trading back up into this level. So it wouldn't surprise me if this market breaks down and possibly retests the low of the weekend of the month. So hopefully you got value from today's video, traders. Keep it simple and work from the outsides at the timing windows, but study your patterns, know your instrument. If you're trading stuff inside like this, if you are looking at something inside, wait until that range expands so that your risk reward is at a certain opportunity that respects your risk management, or have a thesis that this potentially may be a peak formation low for a straightaway trade back up to the high of the week. Whatever that may be, previous day's highs and lows, they can become flip zones. They can be areas to sell into or to buy out of, or to sell off of and buy off of. So keep it simple, traders. Have a great trading session. Start your week off strong. Have a great trading week, and may the markets go.
Hi, traders. It's Stacy Burke from Stacy Burke Trading. If you haven't done so, please head over to my website at stacyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.